Monday, July 24th, 2023, Maneco 64, home of alternative economics and contrarian views. A lot to talk about, of course, but we're going to focus on the CrackUp Boom. Are we in the throes of a CrackUp Boom? And I'll come to that in a minute and explain why there are, of course, a lot of symptoms of a CrackUp Boom. Before I start, though, I'd like to thank all of you for the support of the channel again. Yes, I was away most of last week. I didn't post as much. We had a very nice time, though, up in the north of England. Beautiful place, Yorkshire. I think the people from Yorkshire call it God's country. And you really need to go up there if you have a chance, especially the Yorkshire Dales. Anyway, and I'd like to let you know as well that gold investments here in the UK, they still have the Krugerrands special. You can get 1 ounce gold Krugerrand for 1% over spot. And of course, if you use my promo code Maneco64, you get it for 0.5% over spot. And I've been looking at the gold price in British pounds, and it's rebounded very nicely. And I think, as I've told you many times, fiat currencies, they're all going to continue to sink versus real money, gold and silver for that matter, in the US or North America. Check out Miles Franklin. They always have a special. Just give them a call or email info@milesfranklin and check for their weekly special and tell them that Mario or Maneco64 sent you. So, yeah, Rudy is here, as you can see. We have been out for a walk already, and he's doing really well. So, CrackUp Boom. What is a CrackUp Boom? Well, it's another word for a rush away from paper assets, a rush into real assets, into tangible assets. And why is that? Well, it's because people realize that the inflation policy, the policy of creating currency and credit out of thin air, will not stop, and that it's a deliberate policy. Of course, the Austrians and the Keynesians look at inflation differently, and I have to thank this book for really realizing that, because, and I have realized because I've said many times that we've been brainwashed into thinking that inflation is the CPI. But this book talks about how they started even in the 20s and 30s trying to, the Keynesians especially, there's two schools of thought. You had the monetarists under Fisher, and also Keynes, that eventually said that you need to keep consumer prices stable, but the Austrians saw that as impossible, and that inflation was really the creation of currency and credit out of thin air. So there's a very good chapter in this book, and I highly recommend you get this book. This is a relatively new book. It was published last year. If you want a book that will explain you a lot about interest rates, a lot about asset prices, money, time, the time preference of money, and the difference between these two schools, it's this one. And I haven't even finished it, and I'm sure it's going to get better. But yes, on a section about the 1920s, the author talks about the difference between the Austrians and the Keynesians. And of course, the Austrians have never been given credit for guessing that despite stable prices, that's what the Keynesians always get wrong. They had stable consumer prices in the 20s, and they thought there was no problem, so they kept inflating, and eventually you had a bust and a Great Depression. And I'm afraid the same thing could happen now. CPI coming under control, and then they keep inflating. and then we get a CrackUp Boom. And why am I talking about a CrackUp Boom today? Well, I saw a very interesting symptom of a CrackUp Boom. You can call it hyperinflation. And of course, there are also social and economic symptoms, which we have in spades right now. I'm not going to talk about that. I just wanted to let you know here. There's at Barrow Virtual on Twitter. He tweeted this out recently. The amount of margin debt in the US exceeded the free cash on these accounts by 4.69 times, setting a new record. So the June stock market growth was caused by Americans' aggressive buying of shares at the expense of debt. So you can see here margin debt over free balances of margin accounts ratio. So we are at historic highs. Is that a sign of a CrackUp Boom? I think so. One of them, of course. And back in the 20s, margin debt was one of the causes of the bubble, the stock market bubble, and then the ensuing collapse and Great Depression. Are we going to get a deflationary collapse as well after this CrackUp Boom? Are we in the throes of a CrackUp Boom? We probably are. It's just that being in it and haven't seen one probably in 100 years. Last big one in a major country was 1923. It's difficult to know what's really going on. So I'm gonna read a couple of passages here. The first one is from this book, just to show you the difference between the Austrians and the Keynesians, and why I think the Keynesians, who are in charge, unfortunately, of policy, not just at the central banks, but at governments, they're going to get it wrong. So this is on page 95, and it's talking about the coup de whiskey, which is a reference to when the major central bankers met in 1927 to inflate the system, to cut rates, and it was the Bank of England who asked the New York Fed, Montague Norman asked Benjamin Strong to cut rates because the pound was, it wasn't doing well because they'd gone back to like a gold standard, and things needed to be, were too deflationary for their liking. But it says here, the Austrians embraced the concept of a natural rate of interest, but disagreed with Wixel that it could be divined simply by observing changes in consumer prices. And that's my gripe about having central banks. We should let the market divine interest rates, the natural rates, like the Austrians say. For a start, they were skeptical of the very notion of a consumer price index. As one of their number, Oscar Morgenstern, commented, the idea that as complex a phenomenon as the change in a price level, itself a heroic theoretical abstraction, could be at present be measured to such a degree of accuracy is nevertheless simply absurd. So all that means is that CPI or whatever price level is an absurdity because prices change all the time. Different people buy different things, so it doesn't really reflect anything. And even if the consumer price index could be measured, the Austrians still didn't believe the central bankers should aim to stabilize the price level. So what the Austrians believed in is that they should stabilize credit and the money supply. That's what the Austrians believed in. And I think the Austrians believed also in a perfect world there wouldn't be central banks. And now I'm going to refer to human action, of course, for the CrackUp Boom. This will explain to you what a CrackUp Boom is, according to von Mises, who was from the Austrian school as well. And it's interesting that Hayek, back in 1927, predicted that they were looking at the wrong thing. They were looking at the price level, and not at how artificially low rates were. And I think interest rates are still artificially low, not just here in the UK, but in the US and everywhere else. And why? Well, because we have margin debt that is at historic highs in relationship to the cash in those accounts. And that is a sign of loose monetary policy. Don't let them fool you. Don't let them fool you into thinking that their policy is tight. So this is page 427 from Human Action, and you can get that as a free PDF online, or you could buy this book, which is considered by some arguably the Bible for the Austrian school. So the course of a progressing inflation is this. At the beginning, the inflow of additional money makes the prices of some commodities and services rise. Other prices rise later. The price rises affects the various commodities and services, as has been shown, at different dates and to a different extent. The first stage of the inflationary process may last for many years. While it lasts, the prices of many goods and services are not yet adjusted to the altered money relation. And I think that's what's happened again, like in the 20s. Consumer prices were under control, and they started picking up towards 1928-29, and they tightened. They created a collapse, a depression. And the same thing here. Consumer prices, albeit they've been manipulated, were under control until let's say beginning of 2021. Then they lost control of it. There are still people in the country who have not yet become aware of the fact that they are confronted with a price revolution, which will finally result in a considerable a rise of all prices, although the extent of this rise will not be the same in various commodities and services. These people still believe that prices one day will drop. Waiting for this day, they will restrict their purchases and concomitantly increase their cash holdings. As long as such ideas are still held by public opinion, it is not yet too late for the government to abandon its inflationary policy. But then, finally, the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. A breakdown occurs, the CrackUp Boom appears, everybody is anxious to swap his money against real goods, no matter whether he needs them or not, no matter how much money he has to pay for them. Within a very short time, within a few weeks or even days, the things that were used as money are no longer used as media of exchange. They become scrap paper. Nobody wants to give away anything against them. It was this that happened with the continental currency in America in 1781 and the French mandat territoriaux in 1796 and with the German mark in 1923. It will happen again whenever the same conditions appear. If a thing has to be used as a medium of exchange, public opinion must not believe that the quantity of this thing will increase beyond all bounds. Inflation is a policy that cannot last. So we're not there yet, but I think it will happen. And it's a lot better to be early by a day, by a week, by a month, or even a year than being one day late. And that's why, I keep stacking. What does that mean? Well, I keep converting this fiat currency that's going to continue to be inflated into real assets, tangible assets, and in particularly gold and silver. So there you go. how long could a CrackUp boom last? Well, it doesn't last that long. Back in 1923, it lasted about a year. Back in during the French post-revolutionary France. Also, it was towards the end of the period of about 6 years, towards the last year or two, that it really intensified. And even during the continental continental currency, it was also a short amount of period. And after that, of course, you will get a deflationary collapse. And even then, you want to have something real, because the currency will be worthless, and the only money that will survive will be gold and silver. Some of you think that Bitcoin and other cryptos might survive, and you could be right. But I focus on gold and silver in this channel mainly because there is a historical track record. We haven't seen what Bitcoin or other cryptos have done in a major currency collapse. So there you go. And we're going to keep covering this. And by this, I mean we're going to keep covering the symptoms of a CrackUp boom and whether we are in one. And it seems right now that everything is okay. And there are many of you, rightfully so, who say, well, nothing is happening. Well, but I think a lot is happening. I saw a video the other day that was sent to me from someone in the US that I couldn't even watch here in the UK on YouTube. It was about poverty in Britain. So there's a lot going on that is not good. They've even censored that video. And I'm sure there are others in other countries that have been censored because the powers that be don't want you to know how bad things are. And I will end saying that you shouldn't panic or be scared of a CrackUp boom or a currency collapse, because it's just a human construct. That's what monetary systems are. And if they're not fit for purpose, the best thing really in the long term is for them to disappear. So with that, let's quickly look at where the markets are this morning. It is 8 a.m. London time. So we've got spot gold at 1962. Actually, it's just up a little bit, basically unchanged. The high's been 64, low's been 57. Spot silver is unchanged, 24.62. The high's been 74, the low 52. The Dow futures is virtually unchanged. NASDAQ 100 future is up 12 points, and the S&P is up about a point. To the currencies, sterling is up slightly at 128.70. The euro is up 0.1%, 111.40. The dollar is down a third versus the yen at 141.40. And the dollar is up 0.1% versus the yuan at 1970. To the other currencies, we've got the Aussie dollar up 0.1% at 67.40. The dollar's down 1/8 versus the Canadian dollar, 132.06. And the Kiwi dollar is up a third at 61.86. To the general commodities, crude oil is down 0.5%. WTI is at 76.65. Brent down 0.5% as well at 80.50. Platinum is up $2 at trading around 966, and high grade copper is down slightly at 382.11. So let's check the bond markets. We're going to start with the UK gilts. So we've got the 2-year gilt yield is just below 5%. Yes, it has stabilized a bit, and I think they're going to keep trying to keep this rate under control. And what do I mean by that? Well, I think the Bank of England is going to try to keep intervening and manipulating these rates. And even the UK Treasury, they have something called the exchange equalization account. So right now they can try to keep it under control, but I think the tendency is to see higher interest rates, higher yields. Of course, the lower than expected CPI, I think it was last week or so, is made people believe that things are going to be a little more under control. But as you know, I think these rates are going to go a lot higher than most people think. The 10-year gilt yield, that's come off quite a bit as well. We had going up to almost 5%. We're around just above 470. We're now at 431. Let's quickly check the U.S. Treasury market. So where we got the 10-year yield, yeah, that has come up a little bit. We got back to the 370s, I think, or even below 370 recently. And now we're at 385. It's up 1 basis point overnight. And the 2-year yield as well, that's crept up a little bit from just before I left last week. It was trading around 470 or thereabouts. It's now 487. So that's up 2 basis points. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.